Okay, so there's a lot to cover today, so let's dig into it straight away. Hello, Abdul Qadir. Okay. So first thing first, a reminder for everyone that whatever we're doing, whatever analysis we're doing, our very first objective is to find where that trend is. That's our very first objective. So if we can't find it on that 60 minutes, when we're going to the higher time frame, the idea is to look for that trend still that doesn't change, right? So let's take this a bit further and say, okay, well, what do we want to see after that trend? Yeah. Okay. So far, and I want you all to think about this. So far, hey John.
Hey there, sorry, I'm a bit late.
That's all right. Hello, Abdul Qadir. Okay, so over here we're saying that, all right, we have a move coming down, just as a move. Now, if you think about it, and we've spoken about this a few times, if you say it's a downtrend, then you've got that big seller who is thinking what does it want that will encourage the big seller to put more into that trend, to take that trend even deeper? What do you think that's the case?
Buyers.
More buyers, excellent. More buyers to come in, and that more buyers will also give that seller or that trend a better price, and it will give it a breather to then continue to go lower as a refresh, stuff that you all know. Now, at the same time, what do you think the buyers would be thinking? So let's say right now prices are coming down and it's coming down hot. What do you think every time it comes down, what are they thinking? Any ideas?
Is that the bottom?
Is that the bottom? Yes. And
On esse cenário, from a higher time frame.
Sure. Could this be the SNR? Could this be the level where a bottom gets created? Yes. But what else? What else do you think? Say if price is coming down, what do you think the buyer is thinking?
He wants to see a refresh. He wants to see a refresh in order to open up a position as far as see the
Sure. That's correct. However, before that, it says that every time price is coming down, it's a discount for the buyer, more discount for the buyer, so on and so forth. So the buyers are on the edge saying, I want to get involved. I don't know how to at this stage. Yeah. So any drop is a discount for the buyer in general. Now, what the buyer is thinking is this. The buyer says, okay, very good. I have a move down, but it reacts, and then quickly drops hard. Again, it reacts, go higher, and they say, could this be it? The buyers say, could this be it? And then it just drops down hard again, and so on and so forth. Then they say, it seems like the move down is still strong and healthy because we don't get any signs that tells us, okay, buy now. Right? So
the
So the
volume,
buyer says,
maybe the buyer before they engaged, they want to see the low volatility with the low volume from this sell side.
yeah, I'll talk about this. I'll talk about this. Okay, so the buyer is saying, all right, this move coming down is very hot, very strong. I don't want to get involved yet. Now, what happens next is prices begin to do the same, move up again. That is done in the past. And the buyer says, okay, but every time it's done that, it just collapses down. I don't want to get involved at this point. It waits. Instead of it dropping, it begins to hold and not drop this time. The buyer says, interesting. That's something new. However, that hold begins to entice the buyer and tells the buyer that seems like that move down may be slowing down because of that hold and not an immediate crash after. Okay, but the buyer says, all right, that's very good. I like it. It's of interest to me. I'll keep on watching it, but I won't get involved because I've also seen price do this after. So I don't want to get involved. But as soon as price begins to shoot right up, it says, excellent. That's exactly what I wanted. I have a confirmation that this is the bottom at the moment. I'll explain a bit more in detail. Right? This is the bottom at the moment. Now, if the buyers are interested and this is the confirmation that this is the bottom and they want to buy, do you think they will buy that high?
No.
Will they want the price to come back to some sort of an SNR or this piece at the moment?
Yes.
Who brings that piece down generally? What's it called?
Primary.
Primary seller?
Release. Yeah.
Primary seller, very good. For the release, yes. Now,
Yeah.
Already, it's just me, but I can't see the whiteboard. I just see you. Yeah.
oh,
I
Do you all-
can see it. We
you
can
all
all
see
see
the
the whiteboard.
whiteboard? Okay. Well, I see a lag. I hear a lag as well on your end. Why don't you try to join back in again? Come out and join back in again. Give it a few more seconds. So Abdulkader doesn't miss out and we'll reconvene. Yeah, do you see it now?
Yeah.
Okay, perfect. All right. So they say, okay, bring the price back to somewhere where the buyers begin to buy big again. Now, what we have again, we have that move up. It begins to go sideways where the sellers are still trying, attempting. They're not that strong. It goes sideways. If those sellers who are attempting and it doesn't go low, it does this. What do you think has happened to those sellers?
I just
They're
They get-
underwater.
They're
Trapped.
underwater or they're
They're
trapped,
trapped.
right? Yeah.
Yeah.
So they're trapped. And that's what you said earlier, that when prices come back to the trap area, that becomes your primary and buyers will begin to buy big from this trap area as a release, and whatever comes in again is your secondary stuff that you all know of already. Now, whatever I've said already, I'm telling you that because of this move up, because of this trap, because of this confirmation. Because of this primary, secondary, you already have a refresh coming in for this move down, and that is your bottom. But then you're thinking, but Ali, we haven't taken out the last guy yet. How come you have a refresh without the last guy getting taken out? I'll come back to this, but I want you to begin to think that from here on, you don't need the last guy to get taken out. You have a refresh already. I'll explain that in a moment. But your refresh has already come in. You can begin to sell that secondary already. And I'll come back to it in a moment. Okay, so far so good, everyone?
Yes.
Okay. Now, a variation to this, of course, is when you have a similar move down and the buyer is saying, I don't want to get involved. Every time it does something, it begins to drop again. And then all of a sudden, it begins to see a hold at the bottom. And this hold, they say, okay, that's interesting. Haven't seen that before. That looks like a slowing down of this move at the moment. They say, okay, we're interested, but we've also seen price do this, so I don't want to get involved as of yet. Once it does that, they say, perfect. That's my confirmation, that's my refresh, and that is my trap area over here. And here comes your primary and your secondary. Everything else is as usual. And you all know, let's say in this case, this, when it comes down and breaks that trap, then an on market comes in. Same thing over here. When it comes down, breaks that trap, and on market comes in. Yeah.
Mhm.
Okay, I'm getting a sneeze, but it's taking long. Okay, I'll carry on. All right. So now, what you know in the past, which is your V formation and your test, your primary is nothing else but your V formation. And your secondary is nothing else but your test coming. Okay, so we're putting some information that you already know from the past and telling you what your V formation and test is. And that's where we say your test can come in that deep, can come in midway, can even drop from here and go lower. So test is something that we have to watch and say, okay, now let's begin to sell this. Okay, now, so far, what we're saying is a refresh has come in. Let's now understand, as part of that refresh, where you have your trap over here, let's understand how strong this trap is, or how strong this trap is, and what does that mean? And how could it help us with our information? How could it help us with our decision making? Yeah? Okay.
Yes. Mhm.
Let's draw this on the flip side, which is you have that move coming up. The buyers are okay for now. And every time it goes up, the seller says, I have a discount. I want to sell it, but show me how I can sell it. It does this. It goes right back up again. They say, no good. Does this, goes right back up again. So on and so forth. Until
Yes. Mhm.
it begins to do that and go sideways. instead of launching up. So here it's saying, okay, that's interesting. There's a slowdown of this move up. And don't do this. If you simply confirm and you drop down further, that's a confirmation. I have my top and I have my refresh. And that becomes your trap and that becomes your primary on this case. Yeah? Yes, Jon?
Yes.
Yeah, I have a question regarding this trap here. From what we have learned into the first days, it is not a trap. The trap should be here or here. But this is not a type of a trap in what we've learned. It is
Yes.
Okay.
Yes. So far at the moment, what do you have? You have a refresh coming in, but your last buyer is still intact. And I'm not talking about the last buyer at all so far, right? So you say, okay.
Okay. Yes.
Then what I'm saying is you don't need your last buyer to get taken out or your last seller to get taken out to get your refresh. And I'll talk about that in the next few minutes. But
Okay.
from here on, you don't need your last buyer to get taken out at all. In other words, even if, let's say, your refresh comes in like this, and your last buyer is still there, or your refresh comes in like this, and your last buyer gets taken out, you say, I don't even care about the last buyer. I'm only looking at how the refresh comes in. However way it comes in, whether it takes out the last buyer or not, you're not worried about that. I'll talk about it.
Okay. So it's about the last guy in this case.
It's about, it's about just this piece over here at the top.
Meaning that the discount can happen without taking the last guy.
Yes. And I'll talk about why and how and the reasons. Okay, so that being said, we say, all right, very good. A refresh has come in and now primary has taken price back to the trap area. All we want to see if that trap is strong or weak. Now let's talk about this before I go deep into it. If you have an up move and that's an uptrend, and you have a refresh, primary, secondary, what's your objective? What's your bias? What are you looking to do generally in an uptrend?
Still looking to buy.
Look to buy, right?
Yes.
Okay. Now, if you're looking to buy and you have this refresh coming in and you have your trap over here and you're looking to sell, to buy that secondary to take it higher, would you like your trap area to be strong where when you begin to buy, it will give you problems, or would you like it to be weak? When you begin to buy, it won't give you a problem. What do you think is the answer? Weak, right? So for that reason, we're saying, let's begin to understand if this trap is strong or weak. So when we get an opportunity to buy this and we take it higher, it doesn't give us any problems.
It's about volume, no?
It's a few things. So let's talk about this.
Part of it.
Yeah. Let's talk about this. So let's say, for example, oops. Let's say, for example, this is your trap, this is your primary, and primary brings the price back to your trap area. Now, as soon as it brings the price back to trap area, you need to begin to look at three things. to see if that trap is strong or weak. First thing is, you've got to see when prices come to the trap area, does it spend a lot of time at that trap area, or does it spend very little time at the trap area? So in other words, and I always use this analogy. I'm sure Thomas has heard this before a few times. So let's say you've got a frying pan, and you've just cooked some food on the frying pan, and the frying pan is very hot, right? Now, if the frying pan is very hot, if you put your hand on the frying pan, would you straight away lift your hand, or would you leave your hand on the frying pan for a long time?
Right away.
Straight away, right? So you quickly react as a reflex. So you say, the frying pan is hot, I move my hand. Same thing happens with the trap. If the trap is strong, prices come to it and quickly move away because the trap is hot or the trap is strong. Yeah. However, if you haven't cooked anything on the frying pan for a few hours and it's cold, and now you put your hand or your fingers on the frying pan, can you leave it for long?
Sure.
Right? So if you leave it for long, it means that your frying pan is cold. In other words, same thing happens with the trap. If price comes to your trap area and it begins to hold for a while, that's telling you the trap is cold or the trap is not strong. Right? So that's the first element that tells us the trap is good or bad. And if the trap is weak, for instance, when you have an opportunity to buy this as a secondary, then that should be not a problem because the trap is weak. However, if your trap is strong, then when you're buying it, that will give you problems, and we'll talk about what you need to do. So that's the whole idea so far. So first piece is time spent. Time spent. So let's say, for example, in this case, prices come to the trap area and it quickly reacts and does this. We say time spent is very little, so that trap is strong. Yeah, strong. Okay. Second thing is power, which is when prices come to the trap area, how quickly and how far does it push the price back down? So you've got your power. The further it pushes it back down to where it first started, which is the primary, that means there's more power in that trap. The shallower it pushes it, let's say pushes it somewhere up to here, we say, okay, it's not that strong. It's weak in terms of power. So in this case, in this example, we say your power is
Strong.
strong. Okay, now let me leave the third one for a few minutes and then I'll come back to it. And let's look at an example where, again, you have the same highest point and a refresh comes in and primary takes the price back to trap area and it begins to hold. What do we say if it holds?
It's weak.
We say time spent is a lot, so it's weak. Yeah, you're right. So it's weak. And let's say that's how much it goes before your secondary comes in. We say power is
Weak.
power is weak. So we say, all right, looks like this trap is no good. Any buys you do should not give you any problems as you break higher. Okay. However, in this case, in the first case, if you buy, then you can only buy up to here because this will slam it down again. This trap is still strong. It can slam it down again. And I'll talk about this in a moment. Okay. So let's say you have an example where you have your move up and then you have your refresh. Prices come back to your trap area. And it quickly reacts. So is time spent a lot or little? A lot or, yeah, a lot or little? What do you see? Little. Okay. And then it begins to hold around here. Is the power strong or weak?
Weak.
Weak. So we say time spent is strong in this case, but power is weak. So we have an indecision. We don't have a conclusion on this, right? One part says it's strong, one part says it's weak. We don't have a conclusion on this. So this is where we bring in our third tool, which is volume. Volume. And we say, if as soon as price comes to the trap area and it begins to react, begins to move away, and high volume begins to come in, that will confirm that this trap is coming in with power, with pressure. However, if as soon as prices begin to drop from that trap area and volume doesn't come in high, and I'll talk about what that means or how to spot it, you say that trap is no good. So the volume will help you to say, okay, the whole trap is strong or weak that way. So let's say for example, it comes here, begins to move away, and the volume comes in low. You'll generally see as it's low, and it begins to launch, that's where the high volume begins to come in at the launch, when the buys take over. So that's something to keep in mind when you see low volume and you're getting ready to buy this. You say, okay, I'll buy this, and hopefully the volume begins to come in early on, because sometimes it comes early on, sometimes it comes a bit further, but it begins to come in at the launch. So we say, okay, that's a confirmation. It's going, but your entry is earlier because your trap showed it's not that strong. I'll show you an example on the chart to make sense of this. Okay, so far so good, everyone. We're trying to gauge if the trap is strong or weak for our benefit, and I'll talk about why and how. Now, one thing to keep in mind is, let's say you have your refresh, then when your primary is coming back in, you begin to gauge how strong that trap is. And let's say, for example, prices begin to do this. Now, and then high volume begins to come in as it's moving away from that trap area. Now, time spent is what?
Little.
Little. Power is what?
Strong.
And volume is coming high. Now, what does that tell you about the trap?
Trap strong.
trap strong. Now, this is that ingredient where generally, or more likely than not, you see prices begin to
Go.
never stop and completely violate that area and begin to go lower. That's the combination, that's the ingredient that you need to give you that information or that clue. Yeah. However, let's say your trap does come in strong because of what you saw in terms of time spent, power, and volume, but it still gives you an entry. And I'll talk about this, how you know you have an entry. Still gives you an entry, and you begin to buy this. If you begin to buy this, how far up can you take it before you think a problem can come in?
To the trap area.
To that trap area again. Why? Because previously it showed your trap is strong still. So you can do a buy from here to here, but you have to come out and be on the sidelines to see what happens next. So you come out and prices begin to, that's your secondary that went up. Price begins to come down again. And again, it stops. But again, you have little time spent, power, and volume. And again, it gives you an entry to buy this. That becomes your second secondary. That's your first secondary. That's your second secondary. And you can have as many as possible when it comes to secondary. That's not a problem. Okay. Now you begin to buy this. And it goes up again. Where do you have to stop?
For the trap area.
To the trap area. And then you stop. You come out. You say, I want to now observe what happens next. So you're on the sidelines. And now prices begin to hold, telling you what?
The trap is weak.
Yes.
Yeah.
It's saying to you, now the trap is getting weaker, not previously. So now if you get an opportunity, which is, let's say you have that, and then you have an opportunity to buy this, expect it to go through this whole lot. Or of course, the other way that your piece can come in is it could break up and give you an upper side before you begin to buy it and go higher. But whatever the case is, you can now look to break through this trap area because the trap is now weak. Now, I don't know if this is coming to your mind, but when these setups belong to a higher time frame, then you see, oh, it's not going, oh, it's not going, it's not launching. And now it launches because for the higher time frame, this is tiny, it's not a big deal. However, now you know that, okay, even if it's doesn't want to go now, but you have your buy that you could do and you know when to stop. You have your buy you could do, you know when to stop. And now you know when it will launch after that hole begins to come in. So your timing in terms of when the launch will happen would be more
Accurate.
obvious and accurate now. Yeah. Okay. That's one piece. However, you've now cleared this trap because it showed you it's weak. But when it goes higher, you also have an area at the top that you have to keep an eye out for, because you also have trapped people up there, and you say, okay, same concept. If this is strong, you'll see that happening, which is little time spent, power, and volume. But if you, and then you say, okay, if I buy this, I need to buy it up to here until it begins to hold. You say, perfect. This is also now getting weaker. And then you just take it higher. Yeah. So something to keep in mind. with these pieces. Yes, Jon?
Yeah, I have some questions.
Mhm.
One is that we didn't talk about the volume into this. So in all the scenarios, we didn't talk about the volume of this, only the volume here, which is okay. Another question.
Where I don't see you drawing. Where is that?
In the previous pictures, where we analyzed the
In the trap,
primary
he's
and
talking about the trap.
yeah.
This piece over here?
Yes, we
Yes.
didn't analyze the volume here.
Yeah, so that's my point, that whenever price, so if I give you a simpler version of
Sorry, I want to put another question. Can you undo?
okay, just
Yeah,
before
okay,
you move
it's
on,
enough. Yeah,
before
it's
you
enough.
move on, before you move on. So let's assume that this is what you have right now, which is
Yes.
your primary comes back to the trap area. And here you're trying to observe when price begins to push away from that trap, does high volume come in or not? So you're actually looking at the volume for this trap. Does that make sense, Jon?
Yes,
Yes.
but
So
yeah, okay, we analyzed here this piece, but maybe we can expect to this depending on the volume here or not, because the volume here acts like a wall when coming to the trap area and
yeah. So
rejecting.
whatever the volume is over here. So let's say even whatever the volume is over here, doesn't matter. But the whole idea is when the primary takes the price to the trap area, then what sort of a reaction do we get from that trap?
I understand, but
So
maybe we can
if
anticipate.
oh, okay. That let's leave it to later, and we'll come back to it. But for now, it's the reaction from that trap. What happens after it touches the trap? So if high volume comes in, we say, okay, that trap is strong. We can have a look at an example where I'll show you how to look for the trap, for the volume.
Yeah, okay. Another question was here. Okay, the trap wicks here because of this range. But if the price comes lower, a bit lower, when it goes up, maybe you have another trap here.
No. Your trap is always, you see, this is your highest point. This is your highest point. Your refresh is this piece.
Yes.
And up, if prices don't go above, they don't go above, and then it creates a refresh, then that becomes your trap once it creates a new story when it goes above this previous price. That's one thing. Second thing is, yes, you need to watch out for this area and see what if it's strong trap area or weak trap area. That's an area as well. However, this piece over here is more in line with that trap. So that's giving you information that this trap is weak. So if you get any opportunity, even if it's that far, if it stops and it begins to give you an opportunity to buy this, you say, okay, I don't have to worry about this because this is something I can go through it easily. So that won't be a piece that you have to worry about.
Yes.
Okay.
Another idea would be here. If this is into a dead day, I don't know, a holiday, let's say, in the countries, a holiday.
Yeah.
Okay. When we have this scenario, what can we expect?
So what do you mean you
Of-
have a holiday? Like a
We
bank
analyze
holiday?
the time of the day and if the news is here or it is an active day.
Yeah.
Should we also analyze this trap area with the in terms of holiday or not?
Yeah,
Or
you
just
see,
fancy?
yeah, I get your question. So generally what happens is you say, and that's something we've observed a lot, that you say, okay, will a launch happen now? It's a day off today for US. Will a launch happen today, or will a move happen today? And it does happen today. The market is still active. Let's say the London market is still open, or so and so news comes out and it does move. So I wouldn't say no, it will not move. It will not move when there's a bank holiday in the US. However, because there's a bank holiday in the US, and because it's got a chance that it may not move, the best thing is not to get involved if you think it's going to do a launch today as a bank holiday. Assume it won't do it, because it's got, logically, it shouldn't do it. But if it does it, it does it. But we don't want to go with the idea that, oh, I've seen it before, that means it has to do it again. No, we just say, logically, it's a bank holiday for the US. Let's just not get involved as a proper launch. But if it's a tiny move that doesn't break any boundaries, doesn't break any low and high, then that's still possible if other markets are still open. You know how you have an overlapping between London and New York, and London is still open, then yeah, London can still move markets the way it likes, doesn't need the New York to do it.
Yeah.
But of course, if there is a holiday in the UK and US and it's a very dead day, then best to go on holidays yourself.
Yeah, another question would be, who drives these legs if we do not have a level, or we should find a level here if it reacts?
That big buyer has got two jobs. It's got job number one, which is take your primary back to the trap area, and job number two, which is secondary, to take the secondary to launch. So it's
secondary brings the opposite party. Here the release brings the opposite party, which we need in order to fill in the orders.
Exactly. Exactly. So if the big boy or the buyer doesn't take the primary back to the trap area, which it needs to do, it's in the favor of the big boy to do it, so it does it for the market, right? And says, okay, now I've brought the price back up, right? Now show me what sellers have to offer. And then they say, okay, well, all right, it's good or bad. You observe, and then the secondary begins to come in when they eat up all those positions. Is that your question, Jon, or not?
Yeah, it's okay. Thank you. One more question, and it's the last one.
Yeah.
Are you sure?
Okay, this refresh here. Okay, it appears on a higher trend like legs. So a refresh, a leg on 240, it's a refresh on 60. Yeah, and we say that in an uptrend, the buyers cashes out or take some money here, but here it is said on the lower time frame that we bring the opposite. Here it's a confusion for me. You see the relation between.
I don't fully get that question at the moment. Is it related to this piece at the moment?
Yes.
It's just okay. So please, if you can come again so I can understand your question.
Can I explain to you? I can explain this question. Can I do that,
Yeah.
Ali? Ellie,
Sure.
you know how you on 60?
Yeah.
On 60, right? And you see a refresh?
Yeah.
Right? So he's saying that, on a higher time frame, that refresh means something, that the price is coming down, for example, if it's coming down, right? That's what he's saying. It's like you can be on 60, but you can see what's happening above you. So that's his question, as far as this part is concerned. As far as this part is concerned, right? Because this market is going up, right? Buyers are buying it up, right?
Yeah.
You see this pullback.
Yeah.
This is on a lower time frame, right? This is a refresh,
Yeah.
but on a higher time frame. That's what he's trying to explain to you. But I think he learned that from Lucas from a previous session.
Sure. I'll come back to it in a minute. Come back to it.
Okay, thank you.
No worries. Is there any other hand raised?
Yes, Ali.
Yes.
Yes, a comment today. I think the whole concept today is about the frying pan. It's very important to understand that.
I don't hear you properly, Paul. I don't know, there's an echo or your voice is very far away. Can you try again?
Okay. I am saying, can you hear me now?
It's not that clear, but I'll do my best to understand your question. Go ahead.
Okay. Today, I was saying today's concept is very important about the frying pan because it has solved so many issues.
Okay.
And I had an issue here. I wanted you to tell me whether my thinking is correct or not.
Okay.
Whereby you say, like the whole of this move, we have a trap here because there are some people who are selling here who are trapped. That means a discount will still offer a trap as well, because that is where you say buyer territory and the guy who starts the breach and the guy responsible. Yes, meaning there are some people who are trapped here. Yes. Now
Okay.
I was asking, and we say when this market comes there, right? When it is at the top, it is not a good trade. Yes. We
Yeah,
want
yeah.
the market to come to level where there is that what do you call it? The trap area. This one, the whole of this
Okay.
area now is like a trap. Yes? Because
Okay.
there are people who are selling, but who are trapped with this whole move.
Okay.
For us to generate the buyers and sellers. Now, here, I now understand this concept where Naveen was saying that we need these sellers here for us to buy. Yes?
Okay.
Now, my question was, so if I see a reaction here, this market coming to this area where there is this buyer territory here, but
Yeah.
it starts to hold here. Now it is also telling me that this region is not strong, or what should I think about?
Okay. Okay.
So, but if now it happens like the way it did here, it touched this zone, went up very high, telling me that this zone is not stronger than the way we can now rely on this zone. Yes? Because it
Yeah.
has not been taken out. For the taken out, you have said you will explain what you do.
Yeah.
It has taken out.
Yeah.
I
So-
wanted to, okay.
Yeah. Go ahead. Go ahead.
Now I wanted to add, like, if my thinking is correct, and I can use the frying pan concept, that when this
Okay.
market comes here and it bounces with a lot of power, it's telling me the zone is strong. So
Okay.
if now, like here, the way it is now happening, it is coming stronger as well. But if this zone is not strong and the market starts going up to the trap that way, struggling with many moves, it now then tells me this area is not strong enough. But if this one turns in a one move zone, I will now know this strong is stronger than actually this area.
Okay. Okay.
Or
So-
is my thinking correct?
Okay, so I think, because I don't know if it's just me, but it's very hard to hear you completely. I don't know if it's just me or you all are also facing the same thing. But let's do this. Let me finish this piece first. Let me finish what I have to show you, and then we'll go to the charts. We'll tackle Yon's question and Paul your question, and you tell me, okay, what exactly do you mean? Because I feel like I've taken gist of it, but I'm maybe not 100% with your question as of yet, but we'll do it on the charts so it's easier to understand what the question is. So I'll come back to yours and Jon's question in a minute. However, let's complete this so at least you all follow through with me, because this is very important, and I don't want there's any disconnect to take place with this piece and the next piece I'll talk about. Yeah, and I'll come back to your questions in a minute. Okay, so over here, what we're saying is your trap is now clear to launch, at least launch out of this trap. Or let's say you have your move up and then you have your refresh that way. Then you say primary, and then you gauge your trap. Is it strong? And you begin to see it's holding and volume is coming in low and power is not there. You say, okay, very good. I can have a launch and completely come away out of this whole piece. In this case, you don't have this upper part that you had earlier. Yeah, so you say, okay, this is how I'm going to tackle this. Now, what if this is your 60 minutes? This may answer your question as well, Jon. 60 minutes. Okay, stop. You have a refresh. And let's say, for example, you come to a trend and you see that trend is obvious on your 60 minutes, your high time frame, and you say, very good. And then you say, all right, it's been going up for a while. Okay, I have a refresh on the 60 minutes, but what if it wants to do a very deep refresh? And that 60-minute refresh may not be enough. What if it wants to do that deep of a refresh or a pullback before it goes back up again? That's possible, right? Let me show you an example very quickly, and we'll come back to this, which is at one point, if we have a look at USD yen, at one point it was just going up, and we were getting refreshes on the 60 minutes at some point, and then it goes higher. But the question always came up that it's going up high and it's overextended. When will it do a very deep refresh before it goes up again? Right? That's always a concern, correct?
Yes.
Yes.
Okay. So this is where we say, all right, let's understand these refreshes piece by piece. So you begin to have that move up on your 60. And a refresh comes in. You say, very good, refresh comes in. I'm a buyer. I want to buy. Let me see how this trap is so I can buy. But then you're saying, I'll also keep a flexible mind in case it wants to come in deeper. So I will keep that in mind. Your primary goes up. And you have little time spent, volume is beginning to come in, and power is beginning to come in as well. And then it never holds, it begins to come and break below. You say, look, it's coming in very hot, very sharp. Looks like it wants to do a deeper refresh. However, as soon as you have a violation of this area or a violation of your primary, you say, I no longer look at my refresh on the 60 minutes. It doesn't want to go from the 60 minutes. I have to go one time frame higher. So I go to my 4 hours and I see the same move up. That's the same move up, which is that one. And you're waiting for a refresh again to come in. So you see, it's done this so far. It's done its hold. I'm still waiting for a refresh to come in. Look, now it comes in as a refresh. Very good. You say, okay, primary is now going up. Let me see how that trap is. And your trap begins to struggle, begins to hold. You say, very good. Then you say, I understand what's happening. It didn't want to go from that 60-minute refresh, which only gave this much discount to that big buyer. It wanted to come deeper. And the 4 hours showed you the refresh has come in deeper. And now it wants to launch to keep on going higher. And of course, if the 4 hours, if that discount or that refresh is not enough, then you will see that trap being strong and it will come in strong and it will violate this whole primary. Then you have to go to the one time frame higher, next level up to see, okay, now is that refresh good enough for this whole bigger uptrend? Does that make sense, everyone?
Yes.
Yep.
Yeah. So although you have a trend, you need to use your refreshes and your traps within to gauge, does it want to still do another buy up first? Or is it now really want to come in and violate and come below and come in deeper? That information you will get from the trap area and from how that refresh reacts, what it does. Are you all with me so far, or is anyone confused?
Yes, it's okay from my side.
Everyone else?
I think I'm okay.
I'm with you.
Oh, good. I have a question though.
I
Yeah.
So
think
it's,
Yes, go ahead.
So
uh,
what if on the 60, when it comes down, oh, sorry, I might annotate. So it comes down here, but it never actually comes back to retest. It just keeps going down and then maybe it'll come back later. Are we still dealing with an hour? Because now it looks like we've got a massive gap we're working with. And
Yeah.
it looks like it's going to be higher time frame, but it doesn't come back until, down here.
Yeah, I'll talk about this in a minute.
Okay.
Okay, my question is similar to the one that has been asked about now going down all the way without coming back from the 50. And also, I wanted to know.
Could you use your annotation, please, Paul? I'm really struggling to hear you properly. I don't know why.
Yeah, he needs a mic. I think he's talking directly into his computer.
Yeah, maybe. Yeah.
You need a microphone.
Yeah, needs to get it closer. Need to get, yeah.
Okay, can you hear me now?
It sounds better. Carry on.
Okay. Now, I was saying my question was similar to the one that has been asked, whether when the market goes down without coming back. Yeah? Now, I wanted us to connect with now, if the guy who was here in 1 hour, this is the guy responsible in 1 hour and has been taken out.
Yeah.
When we are now looking at, we are going to look at it has gone below that. And maybe the guy responsible here taken out in 1 hour.
Yeah.
But now, from 4 hours, our buyer's territory was like here, meaning this one was not visible anywhere here. It was not there. Yes.
Okay. Right. So to answer your question very quickly, do not look at the last buyer at all. I will explain when to look at the last buyer in certain scenarios. But from now on, all you've got to look at is you have your move up. Even if your last buyer is sitting over here, it doesn't matter. You simply need this refresh to confirm to you your sellers are here. I'll talk more about the last buyer in a minute. Yeah. Okay. Okay.
Okay.
Okay, good. All right. So let's take a quick 5 minutes break and let's come back and go deeper on this. Yeah.
Yes.
Okay.
Okay. Para sa ating ang isi festive gi matang na primary ka secondary
Okay, let's have a look at a quick example. And whatever we're talking about applies to any time frame, so it doesn't matter. Just let's begin to put it into practice. So I'm here on the monthly time frame on this Aussie Swiss, and we have a move down. That move down, that's the lowest point. Prices come up, begin to hold, showing you an inability to go lower. Instead of going lower, it pops right back up, creating a what?
A refresh.
A refresh, right? Not talking about, not even looking at where that last seller is. Don't even worry about that. Just focus more on this end where you say you have a move up, you have an inability to go lower, and then it pops right back up. You say, very good. That's my refresh. Let me zoom into it. You have your refresh. Then what you do is you're drawing your trap. So it's already drawn. You're drawing your trap. That's the box that you see. That's your trap area. This is where price is right now. Whenever price comes back to your trap area, that primary is confirmed. You all know that, right? When it comes
Yes.
back to the trap area. So what happens in this case? It comes here. It quickly reacts and goes just up to here, right? It quickly reacts. Why? Because time spent over here is very little. What does that mean? Is this trap strong or weak?
Strong.
Strong, right? Let's have a quick look at the volume as well. So you have, as soon as it comes to the trap area, if I move my cursor to the right, do you see increase in volume?
Yes.
Or, yeah, do you see increase in volume, all of you?
Yes.
Okay.
Yes.
So it's telling you that time spent is little. It's telling you that your volume is also increasing, and you're watching it go up from here as it's going up. You don't know if it's going to stop here, if it's going to stop here to give you your secondary. But you know one thing, that if wherever it stops and you begin to enter this as a sell, you cannot go past this, because previously it showed you your trap is still strong and hot. Yeah.
Ali, I have one question regarding the volume here.
Yeah. Just before you go on, let me just finish this, and then I'll come back to your question. Yeah. So primary, your secondary begins to stop here because it gives you an entry. I'll talk about how the whole entry is. Gives you an entry, and it begins to go down. When it begins to go down, your sell needs to stop here, because previously it showed your trap is still strong. So you are out over here and you're on the sidelines. Over here, you're saying, now I want to watch if price begins to hold, or it still begins to do right back up like it did previously. That means my trap is still strong and I have to watch out. So when it comes here and you're already out on this candle, what do you see next? Does it hold, or does it quickly go right back up?
We have a hold here.
Holding.
Inability.
It's holding, right? So there is more now time spent over here at the trap, telling you that already you're out. But if you get an opportunity to sell this again, you can now come through it and not stop anymore. Okay, let's have a look at the volume on this as it comes to the trap area. Does the volume increase as you're going higher?
Yes.
Okay, keep that in mind. Yeah. So we say, all right, I have more time spent, but when it's going up, I also have volume. Let me keep that in mind. And I'll come back to it in a minute. Right? So you get an opportunity to sell this from the top. Now, if I look at the volumes at the top, do you have higher volumes coming in as it's at the top or as it's coming down over here on this candle? Do you have higher volume than what you previously had?
Yes.
Yes.
Yeah. So that's where you're questioning yourself previously that yes, it has spent more time, but look, there's also higher volume coming in. Let me be careful. But as soon as you begin to go up higher, and then now it's coming down while you're selling it, you see higher volume coming in now than what you had previously. You say, very good. Now I have even higher volume than these volumes. The sales that I'm doing, I don't need to stop here. I can easily break through it. Yeah. So here you have your secondary number one. Here you have secondary number two. Your secondary number two is looking to break through it. Let's stop here. I'll come back to the details of it in a minute. I'm trying to take it piece by piece so I don't lose you. You see, I don't lose you. There's a lot of information that we have to cover. So if I go detail now, I fear I'll lose you. You be confused. So piece by piece. Is everything good so far? I know you have a question. Is it Paul or Abdul Qadir?
It's okay. We can go over it.
Yeah. Now, as long as this is good so far as an example, let's quickly tackle your question and then I'll move forward.
Yeah, you just answered my question.
Okay. Very good. Very good. Okay. Now, what we have over here is a move down. So if I quickly reset the chart, we have a move down, a trend, and we have a refresh at the bottom that tells us trend, refresh, begin to sell primary, secondary. Now, what does that mean? All this piece, if you look at it from the smaller time frames, let's say the 64 hours daily and so on and so forth, at many points you'll have a mess at one point on the smaller time frame and then trend begins to come in. A mess, let's say a channel range on the smaller time frame and then a trend begins to come in. You'll have all that mess on the smaller time frames while it's developing these pieces that you see piece by piece. Yeah? So keep that in mind. I'll come back to it in a minute. Okay? Now, what you know so far before today is I've said to you, okay, everyone, you come to your 60 minutes, look for your trend, watch where your last seller is. As soon as you have a takeout of the last seller, you have a refresh, get your primary, get your secondary to sell this. And remember how we talk about, oh, look, yes, I can see a refresh, I can see a primary, secondary, but look, you have gaps in here. Look, it doesn't belong to this time frame, but you can still see it, right? Look, at the moment, if I was to sell this and I don't know which time frame it belongs to, do I sell this on the 5 minutes entry? Do I sell this on so-and-so time frame? What do I do? How do I tackle it? Right? We always had those questions where I said to you all that just understand what you have. Don't focus much on how to enter. We'll cover that. But the reasons for that is because it's a big setup that you can see, but it doesn't belong to the 60 and you have to solve it. Or you could also say that, okay, this is that trend. Price is now so far away from that trend. does it even know where it wants to go when it's so far away? The closer it is to the trend, if it's somewhere here, the better. That's where the trend knows, okay, it's that trend that controls this setup. Price is so far away. Anyway, whatever the case is, to solve what we have, you all kept on going to the higher time frame, right? We say, let me reduce that gap. Let me go to the higher time frame to see where it's coming from. Who owns the setup? What's happening on the higher time frame? And the more we go to the higher time frame, the more you begin to see these gaps become smaller, and you're getting the bigger picture quicker. Now, let's say you come to your daily, for example, and on the daily you see a move down and see a refresh on that daily. And that's where you stop. You say, oh, look, this is so nice, so neat. I have my refresh already. It's so close to the trend. It's a fresh piece for that trend. That piece remembers what it needs to do next because it's so close to the trend, and so on. What is happening is that whatever you were seeing in the past, whatever big pieces you have, whatever, let's say, gaps you have, you're seeing a massive piece which is all inside that refresh, because it's that refresh that owns all the mess. It owns all the bigger pieces. So you say, okay, well, why do I have to bother with that bigger piece if I can just focus on that refresh and understand it piece by piece? And that's what I want you all to do from now on, is to understand we call it the owner's refresh, which will give you a bit more information and useful information. And I'll talk about it in a minute. However, keep one thing in mind, is that to understand your chart reading, to understand how to read the bigger story, you needed to know whatever the market tells you, whatever the market throws at you, you needed to understand how to read it. So now when you come to a time frame and it still gives you, say, a massive setup, you say, I know what this is. This is an expanded look of a refresh. I can see it. But I'll just go to a time frame that gives me my owner. And I'll talk about this a bit more in detail. So let's get our terminologies right. This type of refresh is called an owner's refresh. And that's what you're looking for from here on, whether it comes to your the big boy, whether it comes to entries, whatever the case is. You're looking at that sort of a refresh, primary, secondary. That piece is your expanded refresh, and I'll talk about the scenarios, the limited scenarios where you will use them. But we'll keep that for tomorrow. Yeah? So now, if I ask you, is everything good so far? Are you all with me so far?
Yes.
Okay. If I asked you this question, if I said you come to your 60 minutes and you're looking for your owner's refresh from now on, which doesn't have any last seller, you don't need to worry about that. Any ideas if you go to a lower time frame, what would you see as part of this? Let's say you go to your 5 minutes. What do you think you'll see on the 5 minutes?
An option.
I think we will see the pullback inside the refresh.
Yeah, whatever's inside that refresh, you're going to be seeing that.
Yes, you will see the more expanded look, the stuff that you've been looking at in the last few days. The more expanded look. It simply means that whatever expanded pieces you have, you can simplify it neater when you look at your owner's refresh. Okay, that's one point. And it's your owner's refresh and only your owner's refresh that tells you about your trap, how strong or weak your trap is based on that time spent, volume, and power. So you need to focus on this and nothing else. Okay, and I'll give you a scenario. I'll explain what this means. Everything, you're all with me so far?
Yeah, but
Yes.
I have one question, Ali, regarding this.
Yes.
If we focus, when you say we need to focus on the high time frame or the owners of the trend,
Yes.
do you mean we have to wait until this back to go in or go into trade or try the trade? I mean to do the sale, we have to do to wait until we get the S in the high time frame, or
I'll explain. Okay. Now, let me give you an understanding of how the Forex market is first before I can go deeper. So let's take, for example, other asset class as an example, just to give you to differentiate between the two. Let's say we're looking at stocks or equities. Now, generally what you see in a stock, generally not when you have deep pullbacks like you're having right now, which is a correction, not now, but generally the nature of stocks is it does a pullback and goes higher. Pullback goes higher, right? It's how stocks are or shares are. Now, let's say this is your 60 minutes on a stock, and that's your 4 hours, that's your daily, weekly, monthly. You see, they all, when they reach to a price, they all reach to a price at the same time, because it's a price that's reached this level, regardless of which time frame you see it from. However, let's say price comes here, and on your 60, you see a refresh, primary, and let's say it's beginning to struggle to go lower. So you're saying, looks like secondary will launch, because it's giving you a clue that it's not doing much from that trap area. The trap seems to be weak. The way this may look on the 4 hours, maybe it's just something like this. On the daily, it may look like this, or a bit more. On the weekly, it may look like just that. On the monthly, it may not even show you anything, or just a tiny tail at the top. Yeah. So when prices begin to then launch, then they will all launch. They will all go and perform. But in essence, what I'm trying to say is that you will generally have, say, one owner's refresh at a time, right? Other scenario could be that it fails from here, and then you have to go to the 4 hours. Then you won't have an owner's refresh on the 60 anymore. You'll have it on the 4 hours. So you'll always really have, say, an owner's refresh on one time frame, and you say, let me focus on this to take it higher. In comparison, when it comes to Forex, let's say you have a move up in Forex, and this is your 60 minutes, and you have a refresh. Now that refresh may be sitting in a bigger owner's refresh on the daily. That daily may be sitting on a bigger owner's refresh on, let's say the monthly. So for example, like there's a monthly over here, and this sits this sits in that monthly owners refresh. Right? So the idea is that with Forex, you have multiple owners refresh. And that's something which is good for us. And I'll explain why. It just creates more opportunities that way. I'll explain why. Okay? So, for example, right now over here, you've got a downtrend on that Aussie Swiss, and you have an owner's refresh on the Aussie Swiss. We say very good. Your monthly time frame will become your ultimate time frame. You don't need to look at any higher time frame when it comes to ownership, because imagine you keep on going to the higher time frame to look for that owner, and let's say you end up on the 9 months or 6 months or the yearly, and then you're saying, okay, I have an ownership on the yearly. How do I enter this? So it becomes pretty messed up when you look at the entry for such time frame. So you stop at the monthly. You say, okay, I have an owner's refresh on the monthly. This becomes my ultimate game plan. Right? I need to keep track of this to understand, okay, what do I do next? And I'll talk about this a bit more in detail. However, the purpose of what I'm saying is this. Let's say, for example, you come to your 60 minutes. 60 minutes gives you a move down, and it gives you a refresh, right? And then you get your primary, and then you're saying, okay, I want to see how this trap is. So an opportunity I would get, I would look to sell this. And so far, you haven't even opened up the high time frame to understand what you're dealing with. You only looked at this 60-minute ownership. Then when prices come to your trap area. Now, if you're in a seller's market and prices come back to your trap area, what do you expect the trap to do and tell you? Should it be strong or weak if you were to sell this again in a downtrend?
Trap should be weak.
Should be weak, right?
Trap should be weak. Yeah.
Yeah. Okay. So we say, all right, the information I need from that trap is tell me that the trap is weak. So any opportunity I get to sell this, I know I'll have no issues to take it through and take it lower. Now, what happens instead is prices begin to come to the trap area, and it begins to spend very little time, move away very fast, showing you power, showing you time spent, and showing you volume coming in as it's moving away from that trap area. You're saying, wait a second, that doesn't make sense. Why am I getting a signal of a strong trap in a downtrend? Am I reaching a level? Am I going against the bigger flow on the higher time frame? What is happening? That will force you to open up the higher time frame to understand what you're dealing with. Yeah?
Yes.
Now, you go to your daily, for example, you open up the higher time frame, you end up on the daily, and you see that daily is actually an uptrend. And that uptrend has an owner's refresh as well. And then you have your primary coming in. Now, just as a concept, what you generally know, generally is the 60-minute time frame stronger or the daily?
Daily.
Daily, right? It's got more power. So we say, okay, we have an owner's refresh on the daily, but we also have an owner's refresh on the 60. Daily is more important. It's a higher time frame. So I've got to go with the daily story. Okay. Now, what we have on the daily is primary going up to the trap area, and it begins to come down to tell you that, okay, should you or should you not have an entry to buy this? Why? Because you have an uptrend. Your big boy says, my first trade as primary, my second trade as primary on the buy side to launch. I want to buy in an uptrend. Okay, so let's talk about this. If you have this move down coming in, and you want to see if this move down will stop or not. First of all, what do you think? How many time frames down do you need to go?
Two time frames.
2 time frames, which is
The 60.
60, right? That's good. And when you go 2 time frames down, and this is your 60, what do you need to see to tell you that this move down is stopping?
A refresh.
Volume and a refresh.
Volume and refresh. If we focus on the refresh for now for a minute, so you have an owner's refresh that you want to see, which is some sort of a move, inability, and then a move up, telling you that this move down on the 60 has stopped the move down, which is telling you that this secondary is now getting ready to go up, launch, and not go down.
And if the trap is strong on the 60, you can prepare to buy instead of sell.
Excellent. Excellent. So your trap on the 60 was already giving you clues that
Right.
that your trap is not a trap for the sells, it's a trap for the buys. Okay, now let's go back to that 60-minute trap, our owner's refresh. Your 60 minutes is that piece coming down, which is that piece coming down, right? Now, because of that ingredients we got from the trap, which is it comes in with low, with little time spent, with power and volume. Now, it's giving you an ingredient that says this trap is strong. It can easily do this, correct? And keep on going higher. So you say that is a possibility that could happen. So you're keeping that in mind. The other possibility is, and especially when, let's say, the whole group, the correlation is not ready to launch yet, because this is a daily move, and daily move needs to be with the whole group, with the whole, with power. So let's say that the correlation is not ready, the group is not ready, then you're watching this piece coming in, and you say, this is my 60 minutes. If you were to stop this move from going up, how would you stop it?
Another refresh.
On which time frame?
5.
On the 5. So you say, okay, if prices are ready to launch, they will simply do that. If prices are not ready to launch, that means a temporary sell may come in, whether to here somewhere, and it begins to hold, show you it's struggling to perform, or it could even go lower and then hold, struggling to perform, and then it just launches. So what happens is that if that move, that secondary piece gives you a stop on the 5 minutes, that means you say, seems like it's not ready to launch yet. An attempt for the sellers to come in first, and I expect it to struggle before the launch begins to happen. Maybe it's ready to launch from here and not do this. Does that make sense?
Yes.
Yeah. So either you say, okay, I know what's happening. I know a big buy is coming, but this is giving me an opportunity to sell it, because on 2 time frames down from this owner's refresh on the 60, I have this move coming up, and I'm getting an owner's refresh or a stop on that 5 minutes. So it's telling me it's not going to go up yet. So then it's your choice. Do you do that, sell, and take it as low as it can, and then come out as a very quick sell? because it's still a 60 move, which could be a decent move as a distance, not performance, but as a distance. Or you say, no, I don't want to get involved. I'll get involved on the buy side only, not the sell side. Yeah. So
Yeah.
that's where you put it. You're putting in your first owner's refresh on the 60 inside your second owner's refresh on the 60, and you're saying, okay, I know what's happening. The traps on both owner's refresh are giving me information. I can use that. Now, if let's say the buys begin to come in, and let's say you begin to buy this, but you quickly have a look at, is this daily an uptrend, which is a story for even the higher time frames? Are the higher time frames all uptrend as well? Then you say, okay, well, if that's the case, then that's very good. I can take it high, and in fact, even launch and take it higher, because even the higher time frame is with me. But let's say, for example, your daily says you have an refresh to buy, but when you look at the bigger story, then this piece over here is, as an example, I'm just creating a scenario. On the monthly, it's nothing else but a down move, a refresh, and right now you're in this part of the refresh where you're in that price breaking up.
Yeah.
And that's why I'm showing you an up move on the daily. So you see, so you have another owner's refresh, or a third owner's refresh in this case. So you say, that's fine. I will only buy this up to the top. I won't break above. I won't launch. But it's still a decent move when it comes to your daily that you're trying to trade on a smaller time frame, or your 60 minutes in this case. Whatever buys you do, which launches this, you're saying hold. Okay, I let's say this trap is not that strong. We can break through, and so on. I'll talk more about this a bit more, but I'm just trying to give you an idea that this is how you begin to see owner's refresh within other owner's refresh. But it doesn't mean that you quickly jump into the very ultimate one, because that's the bigger one. You can finish this off first. You say, okay, because this owner's refresh on the daily is against the story of the monthly, I can at least buy it up to this area and not keep on holding.
It seems like we're looking for V formation inside the refresh. Wait. V formation and tests inside the refresh.
No, we're looking for refreshes. That's the first thing we're looking for. However, all I said was that your primary is your V formation. Your secondary is your test. So if you simply, even if you use primary, secondary, that's the same thing as saying V formation and test. Yeah?
Yes.
Is that clicking, everyone?
Yes.
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 Yeah?
Yes.
Okay. Let's have a very quick look at an example on, let's say Aussie USD, and I'll explain a few things for now, but the more detailed bit, I'll explain it maybe tomorrow, because I don't want to throw lots of information at you at the moment. Okay, let's assume we're on the monthly. Let's assume this is our downtrend and we have an owner's refresh. Why? Because you have a move up, you have an inability to go lower, and then you have a refresh. Right? So we say, okay, if that's the case, then let's draw our trap area, which is that piece over here. And let's drag it across. Now, the primary only gets confirmed when it comes back to the trap area. That's your primary.
Mhm.
Now, when it begins to react from that trap, we say, ah, look, there is very little time spent. Okay, the volume is also increasing as it's going up. And okay, let's see, where does it stop? Does it stop here, here, or all the way up? Let's see, how does it stop? On which time frame? From the monthly. If monthly is your owner's refresh, on which time frame do I see this move going up and stopping?
Daily.
Time frames lower. Yeah.
2 time frames below. So
Yes.
from the monthly, it would be not the weekly, but the daily, right? Yeah. Okay. So we say, okay, let's have a look at this on the daily to see when it stops. Now, just by looking at this owner's refresh on the monthly, always keep in mind is that, okay, you want to see how this stops. However, to add more strength, to add more confluence, if you have any level that the primary creates before it comes down, you say, I also like this level. If prices come back to it and they stop at this level and they create that stop at the level, that's an added confluence. Okay, so in this case, we have a level, we say, okay, let's just draw a line. Oh, look, it's coming up, coming up. Let's see how it stops at this level. Let's go to the daily in this case. Oops. The daily in this case to understand how this piece begins to come in. Yeah, that's the level above, and that's where it begins to come in as your secondary. Now, what do you have? You have prices going up, coming down, still 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 going up. Do we have any refresh as such at the moment?
No. Continuation.
Continuation. Now, here it begins to come down, tries to go higher, and then it slams down.
Refresh.
Refresh.
That's your refresh at that level. That's your secondary confirmed. Okay? Secondary confirmed. Now, here you say, okay, I have this refresh and that's my trap area. Keep one thing in mind, that when a refresh comes in and it breaks any previous levels, then your primary doesn't need to come in to that trap itself. It could use any of that level before it continues to go lower. That's the question you had, Ryan, I think. That if it keeps on going and doesn't come back up. So if it breaks a level, then you see this case, the refresh comes in and it breaks that piece. So we say now the primary doesn't need to come, it's not confirmed when it comes all the way up. If it does that, then of course it's confirmed, but it can also just do that and use that as its level and then begin to drop below. Okay, so you've got to keep that in mind. But the whole idea is that a refresh has come in and that refresh has stopped that monthly move from going higher. Okay, let's go back to that monthly. Always look at things from the main owner's refresh point of view. Okay, so in this case, we said prices have come down. We say very little time spent. Any sell we do, which we saw on that 60 on that daily, we say we only stop up to here and not go any lower because the trap is still strong, correct?
Yes.
Okay. And then we say our sells are over, come out, let's just observe. Let's play this and see what happens after. Okay. It begins to hold, right? Begins to hold around here. So we say, all right, very good. Now we have another opportunity at the same level to sell again. This is our secondary number 1, secondary number 2. But when is that secondary confirmed that it's going down? It's when on 2 time frames down, we have a daily owner's refresh that confirms this has stopped. Let's have a look at this again on the daily. This is that move coming up from that trap area. So you have a move up, comes down, goes up, no refresh. Comes down, goes up, no refresh. Comes down, goes up, no refresh. Comes down, goes up, comes down. We have a refresh here. Keep that in mind. I'll come back to it in a minute. Keep it in mind. Goes right up again. Doesn't even stop over here to your primary. Just goes all the way up. Okay, so keep that in mind. Then it goes up. Holds, goes up. Here, it begins to come down. Inability, come down. Do we have a refresh over here?
Yes.
Yes, we do.
Yeah. And primary begins to come back to your trap area and then drop. So this is what we are interested in. Let me talk about why not this. Yeah. So let me put a drawing over here. And let's go to the monthly again. And if I open this up, zoom into it, where is my drawing that I drew?
Into the
Within that
trap.
bar.
Inside the trap. So one thing, keep in mind that when you're waiting for price to come down and then go up, or come down and then go up so you can do your sells, always look for your refreshes or your traps at the top outside this trap, not within that bigger trap, either at the top, so away from that box at the top, or when it comes down and then on the side, but away, not inside that trap, if it makes sense.
Yes.
Why? Because you'll have fake refreshes over here. There's a fight going on between the buyer and seller inside that trap. So your traps that you see inside the box may be a fake trap or fake refresh. Don't go with those. Does that make sense?
Yes.
Always wait for price to come away and say, okay, well, now I'd like to see. Okay, so what happens after is okay, now, right now, your first secondary couldn't go through because the trap was still hot. Your second secondary is now going through without a surprise, right? Because now you've had a hold over here at one point. You have more time spent at one point. So you're not surprised that it's going to break through. Now, if it's here at the moment at this green candle, do you have a takeout of this trap, the bigger trap?
Yes.
I'd say no.
No, exactly no, because it hasn't come out and closed below. It's just simply gone right back in. So we say no. Right? However, over here, yes, we have. It's now the break of that trap area. And now any price that goes right, now we have an on market. That secondary has performed to break through that trap area. Now, if we have any price coming back into this trap again, this will be an underside on market for us. Okay, let's talk about this. If you are here right now, within that trap, price has done a very nice hold, but you now know what this hold is because you are trading this. But this hold is now going to act as a level for you for price to come back up again. And this will be an added confluence, just like how we had early on at the top. And we're saying, let this price come back up. We will see how it stops on the daily, 2 time frames down from that monthly. But if it comes at this level, then that's added confluence. We have a big piece, a big chunk that will help to stop it. Yeah, let's do that. Let's go to let's play this so we can go to the daily. Prices begin to go back in again. Oops, 1 sec. In again. So it begins to go back in again. Let's have a look at what happens on the daily over here at that bigger trap and a thick level above in that trap itself. Okay, let's go to the daily. And it's this piece coming up at the moment. So goes up, comes down, 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 comes down. That's the lowest point. Tries to go higher, slams right back down. Do we have a refresh here? If I remove this, do we have a refresh here? Up until here?
It doesn't close below, right?
Very, very good. We don't have a refresh because it doesn't come down and close below this as a body. So we say no refresh rate. It just right away goes back up.
Right. You got to be spot on with your details here, because if not, you're done, right? You lose on every trade.
Yes, but those details that you are looking at right now is the stuff that we have been doing
since the beginning. That's why you started with it.
Since
I know.
exactly,
Yeah.
exactly.
I get it.
Okay, so we say, all right, it's gone right back up again. Now let's see. Comes down, does an inability or tries to go higher, but at the moment it can't. It does an inability and comes right back down. We have a refresh. That is a confirmation that this underside is now looking to start its on market. Okay, now let's do this. Let's do this. And this is that move down. That's the lowest point. It goes up. Let's draw that inability. This is the lowest point. And that's your trap area as your inability. Okay, now what happens is it comes down, unable to go higher, and we are saying as soon as it begins to break below that piece and create a body, then we have an owner's refresh. So I'll come back to this, but this tries to break below, goes right back in. Do we have a refresh?
No.
No.
No. This time it comes down. Do we have a refresh?
Yes.
Yes. So we have a refresh over here. Why? Because it closes as a body below that first move down. Okay, now this is the lowest point. All this is attempting to go higher, and as it's going higher, it just probes back down and then goes higher. This is not our lowest point. Our lowest point is still that piece. Think of it this way. You have a move down, that's your lowest point. At one point, you're saying this is my lowest point. It tries to go higher, right? It goes higher somewhere here. Imagine if this did that and closed as a body. Do we have a refresh?
Yes.
We'll have a refresh, right? If it did that. However, let's say it tried to come out, it went right back in. So we say no refresh yet. Keep on going. And it keeps on going, keeps on going, keeps on going until you have a proper break on this candle. What it does is it begins to go down, down. Now, this is your trap area that it needs to come back to. When it comes back up, does it touch the trap area?
No.
No.
No. So we say no primary yet. No primary yet. Comes down, tries to go up, cannot, goes down. Over here, begins to go back up again, up again. Now it gives you your
Primary.
touch in the trap area, which confirms you have a primary. And this is where it begins to then drop and drop hard. Okay, now, so far, the idea was that the monthly is our owner's refresh and the daily is also an owner's refresh, but we're only using it for entry purposes only, correct?
Mhm.
So when you have that refresh and it comes back, you say, I'll put my entry over here. I'll put my stops above the whole trap. That's the whole idea, above the whole trap. But of course, we know that putting our stops above the whole trap. So let's say if I do this and I put my stops above that, then it's 100 plus stop for a big move, because that big move is part of the monthly and not a small move. At this point, I want you to practice just that, which is from your owner's time frame, go down 2 time frames to see how to enter it or to see that stop, so you can enter it this way. However, in the future, and I'll mention it now, so in the future you could open this up. In the future, you say, okay, this is my primary going up to that trap area, and I'm on the daily. So if I look at it from a daily owner, then if I want to stop this move going up into that trap, how do I stop this?
All
2 time frames down.
all secondaries on the 2 time frames down. So
Down.
basically, it's like, yeah, any secondary you have, you're looking 2 time frames down to get a better risk to reward, right?
Yeah, 2 secondary, 2 time frames down,
Mhm.
right? So you say, okay, can I see this move going up on the 60? And if I get that owner's refresh on the 60, can I allow the primary to come back up? I put my entry here, put my stops here on the 60. So my stops are now tighter compared to all the way up.
Yeah.
That's something you can surely do, but not yet. I want you to get used to the whole main ownership, and then you go 2 time frames down for your entry, stop there. The more you get used to it, the more you can open up even deeper and say, can I go and refine even further? But if say at this stage you do it, then when you're on the 60 and you're on the 60 for a few hours because you're waiting for that 60 to get ready to give you your refresh, you will forget what you're doing on the higher time frame because you're not used to the higher time frame. You're not used to the whole setup yet. So keep on doing it for a while, and then you say, now I want to refine it further, right? Because but don't further say, can I take this piece on the 5 minutes, 2 time frames down from the 60, and trade this? Don't keep on going lower. But I want you to open it up piece by piece and not immediately. Does that make sense, everyone?
Yes.
Yes. Okay. Let me mention one thing. So going back to this setup on the monthly, what do we say? We say, okay, this is our refresh. This is that first trap that we have to make sure it holds and becomes weak so we can take it lower. But watch out for the trap people below. So the reaction that's coming in right now, if I open this up, is coming in from these people below where it pushes it up first. It's saying to us, these are still strong. So you need to do the same thing again with time spent, volume, and power when it comes back. If you get an opportunity to sell this, when it comes back, you have to come out, because what if it is still hot? If it begins to hold, that tells you, okay, things are improving. Yeah, okay. I want to talk about one important piece at this stage, which is we are on Aussie USD. Let's say you started your analysis on Aussie USD from the 60. You saw mess happening on the 60, and then you come to the 4 hours, you say, why is 60 doing this? 4 hours is doing that. Okay, let's go higher. And the stuff that you've been doing with me for the past week and a half. And then you end up on the monthly and you say, very good, monthly, I have a nice owner's refresh. I can begin to trade everything based on that owner's refresh, which is, if you're getting your secondary, you can sell it. Secondary, you can sell it. Underside, you can sell it, right? Over here, as it's going down, you can sell it as seller until it begins to come to an area where you see, oh, look, looks like it's now higher volumes are coming in, sales are not performing, and so on and so forth. You begin to stop. Even you can open up these pieces and say, okay, maybe I can buy this as it's going up. I don't want to buy it from the bottom, but as it's going up, it's somewhere here. I know it's counter trend, but this is the monthly. Can I use an owner's refresh on the daily as it's going up, or on the 4 hours as it's going up, and see if that trap on the 4 hours, for example, as it's going up, it's telling me secondary is getting ready? Can I begin to buy it even if it's up to here, same high, which is up to here, same high? This way you're not saying, oh, I know the price or the refresh needs to stop over here or over here. You're not doing that. You're closing at the very same high, but it's giving you an opportunity to buy again, so you bought. Does that make sense?
Mm-hmm.
Yes.
Yeah. So when your owner's refresh belongs to a much higher time frame, you can use it as a phase. You say it's in that phase right now. I can do counter trend buys, right? But I don't have to. I shouldn't break the owner on the 4 hours or daily to create higher highs. No, I don't know how far it will go. You can do that sell when it's coming down. Again, let's say the more stronger drop it shows you, you say, very good. Can I do a very tiny sell just here? So if it does that drop and it gives you an owner's refresh on the smaller time frame, you sell it back only to here using that owner's refresh. Let's say for example, you have that drop and you see a nice move down and a refresh on the 4 hours, and it's the same low over here on the 4 hours. Because you have a refresh, it gives you a better price to sell again to the same low without even breaking below, without even guessing. But you begin to use these traps to tell you, is the trap coming hot, not hot? You know, to adjust based on the scenario that you're trying to do at that time. Okay, now, whatever the case is, we are saying that you've come to the monthly, and monthly is your highest time frame where you're looking for your owner. You don't look at any owner above your monthly, because imagine your owner, your ultimate owner is on the 3 months or 6 months. Then you're like, okay, 6 months ownership, 2 time frames down is what you said. It becomes crazy. Don't do that. Stop at the monthly. But when you come to your monthly and you have an ownership on your monthly, you're saying life is now easy for me because I know exactly what's happening on the smaller time frame. It's all within that ownership. And if I was to trade this, I'll simply go 2 time frames down from that ownership as my starting point, correct?
Yes.
From that monthly. However, what if you come up to, let's say, Aussie yen as an example, and you're trying to look for, you come from your 60 all the way up to your higher time frame, and you are on the monthly, and your monthly doesn't give you any ownership. It actually gives you a big mess, a big range. Then you're saying, then what do I do in that scenario if I don't have an owner on the monthly? This is where your whole experience that you have gained so far reading the charts is going to help you. And I'll talk about this tomorrow. Tomorrow, let's do Aussie yen and understand if you come all the way to the higher time frame, how can you trade this? What do you do with this? Yeah.
Mm-hmm.
Okay. So we'll do that tomorrow. Okay. Jon, you had a question?
No question.
Was it Nicholas? Nicholas? Sorry.
You answered it right. I lowered my hand. You answered it right at the end. I was
Okay.
asking, basically, we want to see the owners refresh on the highest possible time frame, right? So if it's a mess somewhere, like I was just going to ask, if it's a mess on the monthly, then we're looking for it elsewhere. We might see it on the daily, and then we can pretty much conduct like what our analysis is from the daily, but still keeping the monthly picture in mind.
Very
Correct.
good. You're very close. You're very close as a thought process. Very good.
Right.
Very good. Okay, but we'll cover it properly tomorrow. Okay, one thing I want to mention is this. And there's a nice example that comes to mind. If I do that. Just to answer your question, I think, Ryan, your other question was this. You said, if you have a refresh and it doesn't come into the trap and begins to do that, right? So, and then it comes back up. What are we doing, right? So if it does this, which is it never comes to the trap, like we saw on Aussie USD previously, and now it comes to the trap, then this is your first move down, that's your inability, and that's your second move down, which is your refresh confirmed. And that's your primary as it's going up. But generally, when it is that far, generally you see it breaking levels. And as soon as, let's say there's a level over here somewhere, right? So as soon as it does that, and let's say this is your level over here, and your refresh has come in, as soon as it begins to, let's say, touch that level, but never touch the trap above, here you say your primary is confirmed. And let's say if then it begins to still come down and never stop over here at the primary, at this point you will have to switch to your 4 hours anyway, right? Because you have a violation.
Mm-hmm.
So you'll be looking at this whole piece again on the 4 hours and not that time frame or that 60 anymore. Make sense, right?
Yeah, it does. So basically, as soon as you go up to 4 hours, you probably don't see this anymore. So when it's coming back, you're not expecting that to release because it's now belonging to, maybe a 4 hour here, or if it goes down, it might be a daily. Or, yeah, because you've seen this on the 1 hour.
Yeah, but as soon as you have that violation on the 60, just don't worry about those. Read the whole thing again from the 4 hours and say, this is my same high point. And your refresh on the 4 hours when it comes in will look as the way it should. It may even cover this whole move as one piece. Right? So just read the whole thing again from scratch on the 4 hours.
Yep. Got it.
Okay. Now, let's say on your this is pound USD, and something to keep in mind. Now, this is your price coming down, and if I simply quickly show you this, you will see it's a massive downtrend, even on the higher time frames. It's a massive sell bias on pound USD, right? However, it begins to break some important areas where a reaction is expected. I'll cover this properly tomorrow. A reaction from the buyers, even if it's, say, a short-term pullback or refresh for the buyers to come in, is expected from this area. You begin to see higher volume kicking in. That's the first sign that comes in. Now, let's read this together. That's your lowest point. It goes up. That's your first piece of a refresh. Tries to come down, cannot go lower, goes right back up. That's your second piece of the refresh.
Mm-hmm.
Now, when it begins to come down, does it come back to the trap area?
No.
Is there,
Inability.
yeah, is there any level in between where it's taking it, touching it at the moment?
No.
No. So what that means is, that means this is your first move up. This is your inability. That is still your refresh making its way up.
Mhm.
You all good so far?
Yes.
Yeah, so where do you
Okay.
go to trap?
That's 1,700 pips.
Yes. Now, this is your trap area. Okay. Now, before we even talk about the trap area, this is your first move up. This is your inability. That's your second move up. What do you think? What sort of a refresh has come in right now? Is it a tiny refresh? Is it a massive refresh? What do you think?
A
Pretty
massive.
big.
A massive.
A massive refresh, right? That is telling you, that's giving you an information that a likelihood of these, that primary, that secondary, not to go lower, violation, and to go higher as a deeper refresh becomes a higher probability.
Very good.
Becomes a higher probability. One more point to keep in mind. Whenever even your, let's say this is your first move up, yes, your inability, and your refresh or your second leg comes in bigger than your first one, that's also a strong sign that chances of prices going even deeper, which becomes a refresh for a higher time frame. Why higher time frame? Because once it violates your primary and it goes up, then you have to go to the higher time frame. So it becomes, you have to look at the ownership on the higher time frame, which in other words means that a deeper refresh needs to come in. So that's another clue when your second piece comes in strong and bigger. So these things I want you to keep in mind. And this is where you say, very good. In such scenarios, although it's a downtrend, but buying from that trap area as a release becomes a higher probability counter trend. Either you all are very lost or you all are good.
I'm good.
I'm also with you.
Okay, because we got a refresh or anticipate a refresh on a higher time frame.
Because you're saying that this refresh that's come in, it's not a normal refresh. It's not a refresh that says, okay, you have a move down, you have a refresh, and get your primary, secondary to sell it. It's a massive refresh. It's telling you that a strong buyer was able to push and create that massive refresh. And of course, it's also showing you the volume at the same time. So when that happens, you say a strong buyer will not just create a refresh and give me my primary, give me my secondary to go lower. it's got a higher chance that it's done this move already because it wants to achieve a deeper move. And the way to achieve a deeper move is to start strong, correct? If you want to do a big jump, you have to start bigger to do that bigger jump.
Ali, I have a question here. It's okay.
Yes, go ahead.
Yeah, I understand that when the buyer came with this high momentum with high volume,
yeah,
sign that it might go higher and higher.
Yeah.
When the sell come in,
yeah,
so with the high volume, I have to show you this. Here, sorry. Here the sell come, although with a higher volume, and the buys here didn't do anything. They became weaker than the seller, the buyers here. Isn't that sign to downtrend as well?
No. Why? Because when you have your refresh, your trap is here. That's your trap area. And this is simply one piece. Assume it's one piece.
Yeah.
Then it comes down. It cannot launch from here. It wants somewhere to launch from. Then it tries to go up, and then it begins to come down again. All that is still prices coming down. And then the strength begins to kick in over here, not this piece. If you compare this piece, not here though, that strength not here, but here. That's the strength begins to come in.
Okay. You mean if it shows the weakness here, then it would be my downtrend.
Yeah. So in this case, if it shows, let's say, if it begins to do this and break below that trap that you've drawn, you say, okay, seems like it doesn't want to go up. It just get the underside of this trap to sell it lower. But what I'm trying to say is that when these refreshes come in strong, then it's got a higher chance to at least your secondary coming to that high, if not breaking and going higher. It's got a higher chance to break in and go higher. So whatever sells you do, if you want to do it, you've got to be very careful, because the buyers have showed that they've come in very strong.
Yeah, I get it.
So one can become a seller again when, if, like you were saying, if it doesn't go anywhere and then it drops down, then you can get the sells on this side, but not any time earlier. Even if you want to say, okay, let me simply sell the secondary and see what it does. And this is how it performs and begins to hold. We say, that's not a good secondary. But even selling that secondary becomes a bit risky because this can easily do that and keep on going higher.
You have your primary, but you don't have your secondary come in yet.
Yeah, the secondary has performed over here, but that's all it does. Nothing else. It doesn't go and break below, break the trap, nothing. There's no proper secondary. It just dies, rolls over and violates. Then you say, okay, well, that's good. Let me have a look at this on the 4 hours now. and you say, oh, wow, look at that. From the 4 hours, that's your lowest point. That's your first move up. All that is your inability.
Yes.
And that's your refresh. Even on the 4 hours, it looks massive. So you say, it looks like it's going to go even deeper. You see, so that's the stuff that you have to keep in mind. But when you look at the bigger story, you're like, I'm not surprised why it's coming in that strong and deep. We can talk about that tomorrow.
So this
Okay,
is still going,
let's-
right? This is not,
Yeah,
hasn't broken anything, so it's still.
no, this is, it's even higher. You were looking at here somewhere.
Okay,
Price is
yeah.
over here right now. Yeah, it's even higher. Okay, so let's wrap up over here. And what I want you all to do is from tomorrow onwards, when you pick your trades for tomorrow and day after, then pick it based on the owner's refresh from here on. Yeah, owner's refresh, the way you all have learned today. And then tomorrow we'll look at some examples, and we say, okay, well, that AUDN, what do we do if we don't have an owner's refresh on the monthly? How do we tackle it? Let's do that. Okay, so yeah, one more thing. You are going to be sent an email today with a link for a review. Please, I would appreciate it if you use that link and put in your comments or a review on how it's been helpful for you, how I've been able to help you out so far with the whole piece. And of course, and I'd appreciate that. Thank you in advance. And of course, some of you are repeat students, so I'd still appreciate you all to do it again, because it just shows you, okay, you're doing it again. Are you still benefiting? Are you still, is it still helping you out? So even for you lots who are doing it again, please, I'd appreciate if you can do it again. And Thomas, thank you again for you, because this is your a few times now. So thank you
Sure.
in advance.
No
again.
problem.
Yeah.
Thank you.
So that being said, please, if you want and if you can, do rewatch these recording or today's recording, just so you can take things in properly before we look at the session tomorrow. Okay.
Okay, thank you.
Take care.
Thank you,
and
Ali.
I'll-
Thank you.
Thank you. Thank you. I'll see you all tomorrow.
Thank you, Ali.
Thank you, Ali.
Thank you.